Hi, this is Lee Gray, and with me is Ethan Solomon, and we are doing our very first episode of, we don't even have a name for this, but it's something like Trade Unafraid Trades. So this is all oriented around how we use Trade Unafraid to place our trades, to manage our trades, and also to decide what not to trade. So Ethan, you have a trade that we're going to go over today. Why don't you tell us about it? Or tell us about your philosophy in trading in general.
What I'm working on right now is I'm using the Strat mostly to determine my bias of direction, my targets, that kind of stuff. And the way I'm limiting my entries is I'm taking inside bar fibers off of key levels, say pivots, maybe like a support or resistance, that kind of area. And the reason I do that is because we all know that in trading, defining some kind of risk reward is so valuable. Ideally, when you make trades, you're going to want to try to get 2-to-1, that kind of stuff. But the biggest issue usually is that you have no reason to believe that your reward will get hit, right? You always, if you're trading earnings, let's say, there's a perfectly made catalyst for your reward to actually be achieved. But if you're just day trading, what is that catalyst? So the reason I'm limiting to just taking it around those areas is because I want to be able to know that I should have a catalyst here, either because there's a lot of activity here in these levels previously. Someone's going to go red, someone's going to want to push back, and trying to use those levels as catalysts to actualize my reward. As a trader, you could have a 95% win rate, but if you have one big loser that takes out all of your winners, and it's not worth it. So you need to know that you're trading with a catalyst.
Right.
So that's why I'm just limiting everything to those levels.
Right. Okay, and also, I just want to point out, you've got a SPY long trade plan and a SPY short trade plan. SPY long is paused. So just say a little bit about how you use these two.
Yeah, so if you pull up those other images, okay, so this is the trade I had taken this morning, and I'll explain that. So in general, you obviously want to determine a long bias, short bias, be very flexible, but when you're entering into a setup, you want to have clarity in what you're thinking, what's the story, what's the narrative. So today, there's the huge gap down, and it was right around that 380 level, which is the previous low of the year. And I guess to answer your questions about the trade plans, I'm not sure if I want to go long or short. And obviously you can choose and trade Unafraid to have your trade plan go both in long and short at the same time. But I believe just in terms of my mental clarity, that would give me much more flexibility, that kind of stuff. So yeah, I guess to jump into why I took this trade, I had a short bias because of the gap down. The 380 point, I believe, would be a place, you see the big hammer candle there.
Just for the viewers, you're talking about this hammer.
Exactly.
Yeah, okay.
Where a lot of buyers had stepped up in the past. So the second that you go under that, all of those buyers are going to be red. You obviously don't know if that level is still important because it was 3 weeks ago and we're, trading on a smaller time frame.
Right.
So what I saw on the 5-minute chart, and I'm exclusively trading the 5-minute chart, is that it looked like there was still, buyers stepping up in that area. And you could also see, right, because you could see the attempts to break below the price numerous times that were continuously shot up, right? So it never really broke below, and yeah, so...
Here you're talking about, like, here, this little hammer, that kind of thing?
Also the next candle and the next candle.
Yeah.
Right? Those wicks should tell you that there are people trying to step up here.
Yeah.
Trying to keep the price over 380. But the wicks also tell you is that they are constantly losing.
Right.
Right. So essentially what you're creating here is a level in which a lot of people are trying to support that level, right? And you can see in the past that it was a very important level. If it fails, it should fail very, very hard. So I determine a catalyst, right? And I believe that right now, when the bar breaks, I should have my catalyst, right? And that's very important because I don't have to sit and wait. I should know immediately. And that will obviously significantly reduce your stop outs. You want to be able to have a tight stop, right? How do you have a tight stop, right? So I believe that knowing that your catalyst should be here when the price is actually taken or when the low is broken should be very, very effective.
Right. And this is what you were seeing in Trade Unafraid alerts.
Right. And obviously you could see that the 5er would cause a break on the 15er inside breaking down, which would cause more red on the 60, more red on the day, in terms of like I was talking about using Strat to determine your bias, you'll notice that it ended up being a 3-bar. Why didn't I take the long and go with the buyers? Because my bias is very, very strong to the downside.
Yeah.
Because of the story that's going on the higher time frames.
Right. Okay. All right. So let's actually see it play out. Are we ready for that?
Yes.
Yeah. Okay. So there's the entry. It just triggered, and so you're in puts.
Yeah. So the way that I have my exit metrics set up right now is that I have a candle trail. Right. That will essentially put a stop, since I'm short. Right. A stop at the top of the previous candle. And we know that, the definition of a losing trade is 2 against you. And then in addition to that, I have, a metric for taking profits and adjusting stops based on pivots or candle magnitudes, right? So, and you can see I add the low of day here. And it happens to be that the candle magnitude exit isn't going to really be utilized here because we were talking about going into your lows, so there wasn't any pivots.
All right, so you've paused your target?
Yeah, I had it was a bit of like a rough trade, as you could see. Like I ended up getting another inside bar after that almost took out my stop.
Yeah.
To me at that point, a lot more buyers had stepped up. I had, if I had taken profits there, it would have been very, very little. And at that point, if you're going through the low of day, I would have rather just, as you can see there, I put my stop at around break even. It ended up closing, shooting down after that point. I just took some profits there. So I just wanted to protect my gains, but I didn't want to start taking profits because I had all that after my entry, I had a lot of pullback. So, I just wanted to see it go through it and not take profits early.
Right. Okay. So you've locked in $23, but you're up 60 or so right now.
Yeah.
So the candle trail is still active, but you manually set a stop a little bit lower than that.
Exactly, yeah. And, in general, something I try to apply is that, the benefit of trading the way like this in terms of at these key levels is that you know that you have your catalyst there, right? So if a key level is broken, then you know that if it doesn't react well immediately, then people are buying, right? Because, the second that, for example, low of day, right? The second that low of day was broken, everyone is red, right?
Yeah.
That was buying and keeping it afloat at that point. So if you end up getting, let's say, 50 or 60 cents below that level on SPY, and it ends up coming back and taking, let's say it goes back to 379.2, right? You have a very clear reason to believe that the buyers are stepping up and you're going to get stopped out. It's going to reverse back against you. And yeah, obviously there are many times that doesn't actually work out like that. But from what I have seen so far, tracking my data, that, being more at these levels, at important levels, being aggressive with your stop, has always been very, very beneficial for me over the long run, of course.
Okay, so it's still moving in your favor. You're now up over 100, and you move your stop again. Same rationale, basically.
Same rationales. You have another 2 down. If they go against you and start going through the previous bar, never become a sitting duck. I usually am not this aggressive with the stop, meaning I usually won't change the stop because of an inside bar. But here, I just moved it a little bit above 378 because I believe that could end up, I just want to make sure I get as much of those profits as I can, especially the volatility on SPY. You don't get stopped out at 378 and it goes to 378.5. That's going to happen.
Yeah.
Just keep being aggressive with the stop.
Right. Okay. So here we are a few minutes later, and you're still looking good. New candle, and now you place your stop. It looks like at the open of the prior candle.
Yeah, just moving the stop down.
Yep.
I'm being very, very aggressive at it because, I think that we should be at a point where we start pulling back. If you just watch the tape, it's like, it's not fantastic, it's not very bearish. If it keeps going, then, everyone starts vacating, then great. If not, just take your profits.
So the other interesting thing about this is, of course, you are managing an option trade with stops based on the price of the underlying. Why do you think that's useful? I mean, what makes that an important feature in Trade Unafraid?
Whenever you're trading options, the speed and execution is of utmost importance. Before you even start talking about conflicting orders and that kind of stuff. So in SPY, the delta per dollar, right, for 25%, a 0.25% move in SPY is around 50 to 60 cents. right? 50, 60 delta. So you're talking about a ton of volatility, right? Entering or exiting 20 cents late on SPY, that could be 5% of your trade easily,
Yeah.
right? So it's very important.
Yeah. Okay. Okay. And another few minutes later, still all red candles. So you have multiple stops at different levels. They're dynamically managed, as well as your own manual stop. They're all cooperating to protect your trade. And then at this point, you decide you're going to delete your manual stop by hitting that to X out the underlying break price.
Right. And so the reason I do that is like the whole reason of applying those manual stops is because like my end stop is 2 against me. So, if the only reason I'm doing that is to save profit. Right. So if there's only 30 seconds left at the bar, the tape's really quiet. I don't want to get, taken out by a penny just for it to keep going.
Right. Okay. So this candle is going to be closed in 25 seconds. So you are just letting that candle trail take over. Okay. And so there was the candle trail that just relocated.
Yep.
And there's the stop. So now you have both of your trade plans paused, long and short. So in the end, you made $243 on this trade, which was almost 15%. And these are the actual executions. So you bought 3 at 541. 9 minutes later, you sold 1 at 564. And then the final 2, 28 minutes after you entered, you sold at over $1 profit.
Exactly.
Very nice.
Thank you.
All right, well, thanks. This was very interesting, and congratulations.
Thank you.
All right, we'll talk tomorrow.
Yeah.
All right, bye-bye.